It is full year financial results time here at XP Power. I'm joined by Duncan, the CEO, and Gavin, the CFO. Duncan, let's start with an overview at the group performance.
Okay, so we had quite a mixed performance in terms of the sectors. We had really good growth in technology, industrial and healthcare, but the semiconductor manufacturing equipment sector was down for about 3/4 of the year in its cyclical downturn, but came back very strongly in the fourth quarter in terms of our order intake, which was pleasing to see that recover. We've actually got ourselves in a position where we're recovering the tariffs from the customers in the USA in respect of the 301 tariffs that were implemented in the USA. That's pleasing at the end of the year. Vietnam is actually come up to speed, and we've actually transferred over 2,000 different products into that Vietnam facility now to actually mitigate the effect of the tariffs and also to actually give business continuity planning. And finally, I guess the free cash flow was actually very strong.
Okay, we'll drill down into that in a bit more detail in a moment. Cash flow, over to you, Gavin. Financial results.
Yeah, as Duncan mentioned, it was quite a challenging year. The order intake was up 8%. In constant currency was up 4%. And that translated to a revenue performance up 2% in absolute currencies, but in constant currency we were actually down a couple of percent, just reflected, as Duncan mentioned, the decline in the semi-fab sector.
Duncan, let's have more of a look at the sectors, and we're mentioning semi-fab again there, healthcare, industrial, technology. Just explain how they performed individually.
Okay, well, let's start with industrial. That was up reported 6%, which is quite pleasing when we've seen quite weak PMI numbers in continental Europe in particular. But again, we're very much focused on the industrial electronic niches, which are growing quite well. Things like additive printing, 3D printing, robotics designs we're getting now. And we're actually seeing a lot more connectivity in all the sectors. And by that, I mean the power supplies are getting bigger, more sophisticated, and the customers actually wanting us to do firmware and software where their tool or application is communicating directly with the power supply. So we're able to communicate with the tool and vice versa. So that's a trend which I think is helping us grow in industrial above market rates. Technology up quite a lot. I mean, it's a smaller sector. It was 13% of revenue, but we grew about 32% on a reported basis there, and we had some big, strong programs coming back to life there, which really helped there for us, which was good. Then healthcare, finally, on a reported basis, up 7%, which is good to see. And again, I think we're growing above market there. And again, the theme of connectivity is taking place there. We're doing higher power solutions now. We've got higher power products in the portfolio. And again, we're Ethernet connected so that these medical devices can actually communicate with the power supply and vice versa. Redundancy, diagnostic reporting of the health of the power supply, quite ironic with it's a healthcare application. So that's quite good. And then semi-fab, which is the one that people like to talk about. I mean, as I said, it's been in a cyclical downturn. Reported basis, it was back 21%, which is quite significant. Organic, it was back 47%. So it's pleasing we can produce a pretty robust set of numbers with one of the major sectors going back so quickly. But semi-fab, as I said, it's coming back to life now, and I think the long-term, medium-term prognosis for that sector are very good indeed. We've got so many things driving it now, big data, artificial intelligence, autonomous vehicles, Internet of Things, and this connectivity theme as well driving that.
Okay, we're going to talk about another worldwide aspect of health in a moment on a totally different subject. But what about the health of the gross margin, Gavin? Is that kind of down for a while, or
no? That was a 2019 issue. If you think of the three factors that drove it, the first one was the tariffs. It took us some time, but we're now fully recovering the Section 301 tariff. That's 25% on our products coming from China. We're now 100% covering that. The other factor was the semi-fab mix. That was a cyclical downturn. It now looks like it's recovering in 2020, so that'll be a benefit to our margin. And Forex, well, that's always going to be something we have to face. We are taking further actions to improve our gross margin. We announced in the summer of 2019 we were going to relocate production from Nevada to Vietnam. That will be completed by the summer of 2020, and we expect benefits in the second half of 2020 and then going forward.
Duncan, I mentioned we'd talk about another aspect of health, and obviously this is COVID-19, coronavirus. Now, bearing in mind we are talking as these results come out in early March, so if you are looking at this video in 1 or 2 months' time, this could have changed, but where do we stand at the moment? regarding your staff, your different sectors, but also financials as well?
Yeah, it's a good question. I mean, the situation is very fluid, and I think you're right to point out that things change very quickly. So even in a week's, 2 weeks' time, things could be different. So our China factory was delayed in terms of its opening. We expected to open on the 1st of February. We actually ended up opening on the 17th of February due to the travel restrictions and healthcare restrictions in China in particular. First thing is, I mean, the health and safety of our people is paramount, and we've put all the necessary epidemic prevention and control mechanisms in place to safeguard the well-being of our people in the factory. But we are operating at lower capacity than we would otherwise want to, because there's still a lot of travel restrictions of getting people back to work. And I think realistically, we're not expected to be back at full capacity until mid-March at the earliest, probably. And I think that's inevitably going to lead to some slippage of revenue from Q1 into Q2. I think at the moment it's too early to say whether that would have a material effect on the half-year numbers, but obviously we're doing everything we can to actually make sure that it doesn't. Our supply chain people have been working really hard right throughout the lunar Chinese New Year closure. They were working at home, working on the supply chain, because a lot of our supply chain in China is in a similar situation to us. Well, the other thing is Vietnam opened on the 1st of February as we expected, at working at full capacity. And the other lever we have is we're moving even more products from China to Vietnam to actually mitigate that loss of capacity in China at the moment. So it's kind of good that we've got that facility there.
Gavin, back to you. You implemented a new ERP system in Q4. What effect is it having?
We implemented a new SAP system in October of 2019. Initially, we did have some learning curve challenges as people adopted the new processes that come with this system. We've put it across sales units in Asia, Europe and North America. So it's a very wide impacting tool. It's performing well. The business has got up to speed with the new processes and the more controls in place in them. And we're confident it's going to be a great platform for the future.
Interesting. Watch this space. Gavin, I'm going to stay on you. If you could talk about dividend, but also give me your milestones looking ahead for the rest of 2020 and beyond.
Free cash flow was really strong in 2019, up 153%. So that gives us confidence that we can continue to grow our dividend, and we've reported an increase in dividend for the final dividend for 2019. Looking at 2020, there's a lot of things going on. We've got the uncertainty of the COVID virus. We've got the recovery of the semi-fab market. We've got the ongoing challenges with North America with tariffs, but we're recovering those, and we're moving more and more production to Vietnam. So I think we're quite upbeat for 2020, as much as we can be in the global environment.
Duncan, can you translate that into your milestones for the business?
Yeah, I think Gavin summarised it quite nicely. There is some caution in our outlook because of the situation with the COVID-19 virus. But against that, we're into 2020 with a very strong order backlog. We had very, very strong orders in Q4 last year. Order intake so far in 2020 has been very robust as well. We've got the benefits of the Minden shutdown and transferring that product into Vietnam. Gavin also mentioned that. And we are fully recovering the tariffs. So, I mean, against those backdrops, I think we're feeling pretty good about 2020.
It's certainly going to be an interesting year from many, many angles. Gavin, Duncan, thank you very much for filling us in on XP's full year results.